Hello traders, welcome to Currency Watch. This is Chris Keene from KeenPointOfView.com. We have setups across the board here, and it's going to make up for an interesting next 24 to 48 hours. Tomorrow morning we have the Bank of England interest rate decision, and we also have the ECB rate decision, and more importantly, press conference afterwards. And then we have the FOMC minutes later on in the day, followed on Friday by non-farm payroll. So data, that is the word. Heading into this news, though, we have a few pairs that have made marked moves over the last few days, such as the Aussie USD breaking down after the RBA's surprise interest rate cut. Now, though, heading into the Asian and European tradings tonight, we had a break lower in the Great Britain USD cross. The New Zealand USD is challenging the bottom of its trend line. So let's take a look at these pairs and see what we can come up with for tonight's trading. First thing we want to look at is you can see that the Great Britain USD broke below its trend line. If we look on a yearly chart, we can see this is pretty significant because you can see this trend did contain the pair for over a year and a half, and the pair managed to break above it a few weeks ago and move all the way up towards the 163 level. But today it broke back down below, and it also broke below the ascending trend line that the pair followed higher throughout the month of September. So now if the cross can remain below this level, and let's focus it back down onto a smaller range chart, below this level, we could quickly see a push back down towards lower levels. The first level I would target if we a confirmed break below this level would be the 0.382 fib at 160, followed by the 50 fib at 159.03. So we're looking at a rather large move here. If we could get the momentum to the downside, we could be looking for the pair to move down almost 200 pips in the short term. The next pair I'm taking a look at is the New Zealand USD, because you can see the New Zealand USD cross has moved down over the last few days, and as we all know, it has been playing this range. The top of the range is 83.50, the bottom of the range is 81.85, but it did manage to peek its head below the bottom of the range today. If we can get a break below this level, and we'll open the pair up for a move down towards the 80.50 level. Of course, you'll have to watch these fib levels in the meantime and the drop behind, because this 0.815 level is actually the 0.382 fib from the move higher. So we could find resistance at the 50 fib at 0.8134, followed by the 0.618 fib, just a little bit lower, but the ultimate target would be a move down to 80.50, and if we get to that level, we can consider a move down to 79.10. So this is definitely a trade to keep your eyes on heading into Asian trading. And the last pair we're going to take a look at is just the USD CAD, because you can see the CAD broke above the consolidation zone that has been keeping the pair in check over the last few days. Now firmly above this level, if we can firmly above this level, the pair could gain some momentum, and look for a move back up towards the 99.50 level, or even to parity. And resistance can now be found at past support, support can be found at past resistance at 98.50. All right, that's it for all the news today. Now keep all the trades for today, but keep your eyes out for the data tomorrow. It should be exciting, and on Friday. This is Chris Keene from A Keen Point of View, and this is Currency Watch.